Hello students, how are you? I Dr. Lal Babu Jaiswal, Assistant Professor, Faculty of Commerce, Banaras Hindu University, Varanasi, Uttar Pradesh, India. In previous class, we have discussed about the calculation or computation of the total income under the default tax regime, under the optional tax regime, with the help of the various types of deductions, with the help of the under the head of income from salary, income from house property, income from business and profession. So dear students, at the time of the computation of total income of any assessee, we should be full aware regarding to the various types of provisions of deductions chapter 6a regarding to the computation of 5 hats. So now I am going to discuss and elaborate the next case study of the total income of an assessee of a person. So dear friends, dear students, this is the case third of gross total income as well as total income. Mr. R, age 55 years, a resident individual and practicing chartered accountant, furnishes to you the receipt and payment account for the financial year 24-25. This is the current financial year. Receipt and payment account under receipt side, opening balance of cash in hand and cash at bank is given. Fee from professional service gross 59,38,000, rent 50,000, staff salary, bonus and stipend to articled clerks 21,50,000, other administrative expenses 11,48,000. Dear student, office rent is given in this question 30,000. Motor car loan from Canara Bank at the rate of 9% per annum, rupees 2,50,000 is the amount of the loan. Housing loan repaid to State Bank of India includes interest 88,000, 1,88,000. 88,000 is the interest amount and 1 lakh rupee is the principal volume. Life insurance premium 10% of sum assured, rupees 24,000. So life insurance premium, it is a part of the deduction under section 80C. Motor car acquired in January 2025 by account paycheck 4,25,000. Motor car is the capital expenditure. Medical insurance premium for self and wife paid by account paycheck 18,000. Dear student, medical insurance premium should be paid by an assessee by the other than cash. If it is paid in the terms of cash, then it will be not allowed as a deduction under section 80D. Book bought on 1st July 2024, annual publication book by account paycheck 20,000. Dear students, the book, the depreciation is allowed at the rate of 40% per annum. So dear students, and next point is computer acquired on 1st November 2024 by account paycheck for professional use, rupees 30,000. Domestic drawing 2,75,000. Public provident fund subscription, it is a part of the section 80C. Motor car maintenance, rupees 10,000. Closing balance 19,15,000. Dear students, so with the help of this question, with the help of this problem, I am going to calculate the, dear student, I am going to calculate the solution of this question with the help of the further following information. बच्चों, further following information very important. He occupies 50% of building for own residence and let out for the balance to residential use at a monthly rent rupees 5,000. So house related expenses will be allowed at the time of computation of income from profession and 50% use the house used for let out the building. So let out the building, rent, let out actual amount of rent rupees 5,000 per month, and for 12 months 60,000 will be called as actual rent, and it will be taxable under the head of income from house property. Motor car was put to use both for official and personal purpose, and 1/5 of the motor car used for personal purpose. So then 2/5, 1/5 and rest of the 4/5 will be related to the professional purpose. No car loan interest was paid during the year. Interest will be deducted on the basis of either accrue or payment. There is no any types of point whether the interest is paid or not paid. The written down value of asset on 1st April 2024 was given below. Furniture and fittings 60,000. On furniture fitting, the rate of depreciation is 10%. Plant and machinery, air conditioner, photocopiers, etc. In this case, the depreciation will be also calculated. On computer, the depreciation will be also calculated. Note, Mr. R follow regularly the cash system of accounting. Cash system of the accounting means all types of payments are considered, all types of receipt are considered, whether these payments are related to the previous year or following years. Dear students, computation of total income of an individual, computation of total income of R for the assessment year 2025-26, assuming that he has shifted out the default tax regime under section 115 BAC subsection 1A. Today student, this question has been solved under the optional tax regime, under the old tax regime. So income from house property, self-occupied, annual value nil. Deduction under section 24B, total deduction amount of interest of the housing loan 88,000, 50%. 50% is used for the residential purpose, 50% used for the professional purpose. Additional information number 1, it is given he occupy 50% of building for own residence. 50% for own residence, so 50% for professional purpose. So then we are trying to say only 50% will be taken for consideration as a self-occupied. So self-occupied, in the case of self-occupied, 44,000, total amount of 44,000 related to the interest. This loan is taken, the building was constructed during the year 98-99. So then the at that time the amount of interest will be capped up to rupee 30,000. So this interest regarding to the self-occupied house property will be 30,000. So 30,000 will be in minus figure. This will be also called income from loss from house self-occupied house portion, house property. Second is let out house property. In the case of let out house property, 5,000 per month is actual rent, and municipal value, fair rent, standard rent are not given, which were related to the finding out the gross annual value under the income from house property. Section 23 is related to the finding value of the gross annual value to annual value, and section 22 is related to the definition section, charges section of income from house property. So dear friend, dear student, in this question only actual rent is given. Actual rent is 5,000 per month. So for 12 months 60,000. Deduction under section 24, 30% of annual value. So 60,000 got 30%, 18,000, and interest 50% of the total amount of interest paid. So 50% of 44,000 will be 88,000 will be 44,000. So 18,000 plus 44,000 is equal to 2,000 will be minus out of 60,000. So then rupees 2,000 will be treated as a loss from house property. So loss from house property regarding to the self-occupied house property 30,000, regarding to the let house property rupees 2,000. So total loss from house property rupees 32,000 in minus figure. Dear students, next income from profession is calculated. Income from profession, fee from professional service, it is given in the question, and all types of allowed expenses will be deducted which are related to the professional purpose, in which staff salary, bonus, stipend, other administrative expenses, office rent, motor car maintenance 4/5, motor car maintenance 4/5, car loan interest not allowable since the same has not been paid in the assessee follows cash system of the accounting. So when the cash system of the accounting preparation is adopted by the assessee, so dear friend, dear students, the car loan interest is not allowable. If this account is maintained on accrual basis, so then car loan is allowed whether it is paid or not. So car loan interest is not allowed. So total amount admissible expenses 21,50,000 regarding staff salary, bonus and stipend, 11,48,000 other administrative expenses, 30,000 office rent and motor car expenses 4/5 of rupees 10,000, 8,000. So then 33,36,000 will be treated as a total administrable expenses which will be deducted out of 59,38,000. Then resulting figure will be called 26,02,000 will be income from profession. Dear students, income from profession, and out of this types of income from profession, the additional information, under the additional information, the depreciation will be deducted. Furniture and fitting 40,000, books 40%, furniture fitting 10%, plant and machinery 15%, computer 40%, and new computer 40% will be minus regarding to the depreciation which are 77,500. So 77,500 and previous admissible expenses total rupees 25,24,500. It will be minus. And gross total income will be 24,92,500. Although this question is solving under the old tax regime or optional tax regime, so then chapter 6A deduction will be allowable. So regarding to the ATC housing principal payment will be deducted under ATC, PPF will be deducted under ATC, life insurance premium will be deducted under ATC. So total amount of 3 items 1,44,000, and medical insurance premium has been paid by check rupees 18,000. So 1,44,000 plus 18,000 is equal to 1,62,000. 1,62,000 will be minus out of 24,92,500. Then finding resulting figure will be 23,30,500 will be treated as a total income. Dear students, now I am going to discuss the next case. This case is case number 4, and this case is also related computation of total income of an individual. Mr. R and M are sisters. R and M are sisters. R and M are sisters, born and brought up at Varanasi, or got married in 1983 and settled at Canada since 1984. M got married and settled in Varanasi. Both of them are below 60 years. The following are the details of their income for the previous year ended 31st March 2025. Pension received from state government. Pension received from state government rupees 60,000. Pension received from Canadian government rupees 20,000. Long term capital gain on sale of land at Varanasi, M का 1 lakh rupees, and in case of R, in the case of R, rupees 1 lakh also. Short term capital gain on sale of share of Indian listed company in respect of which security transaction tax was paid rupees 20,000 and 2,50,000. Life insurance corporation premium paid rupees 10,000 only for one assessee. Mediclaim policy premium paid by account pay check only for one assessee 25,000. Deposit in public provident fund rupees 20,000. Rent received in respect of house property at Varanasi rupees 60,000 and 30,000. So dear students, dear learners, this is a question which is going to discuss with the help of the solution. So dear student, computation of total income of Mrs. R and Mrs. M for the assessment year 25-26. First, salary, pension is a part of the salary. So pension received from state government 60,000, deduction under old tax regime or optional tax regime rupees 50,000. So then 60,000 minus 50,000 is equal to 10,000. Dear students, pension received from Canadian government is not taxable in case of non-resident since it is received outside India. Income from house property. Dear student, income from house property, rent received from house property at Mumbai, assumed to annual value in the absence of other information, and it means actual rent will be treated as a gross annual value. So 5,000 per month for 12 months, 60,000. Standard deduction 30% of annual value, 30% of annual value will be deducted. So then after this, capital gain, in the case of capital gain, long-term capital gain of sale of land at Varanasi, short-term capital gain on sale of share of Indian listed company in respect of which security transaction tax was paid 20,000, 2,50,000. So gross total income case first, second, third rupees 1,20,000 and 3,50,000. Dear students, deduction under chapter 6A, deduction 80C, life insurance premium paid only rupees 10,000, deposit in PPF 40,000, mediclaim insurance claim premium 40,000 and 30,000. Total deduction in case of chapter 6A 40,000 and 31,000. So then it will be minus from the gross total income. So we can say total deduction 40,000 and total deduction in case of total deduction under chapter 6 is restricted to the income other than capital gain taxable under section 311A and 112. So dear students, in this in the case of Mrs. M, so we can say in the case of Mrs. M, so income from pension under the head of salary 10,000 and income from house property in the case of 21,000. So total amount except capital gain, total amount of income including income from salary, income from house property rupees 21,000 except capital gain. So in this case capital gain is rupees 3,50,000, but except capital gain the other income, that is income from salary, income from house property 10,000 and 21,000, that is 31,000 and 31,000. Total deduction is the eligibility of the total payment of the total payment amount on the basis of payment deduction 55,000, but only 31,000 will be eligible to deducted, because in the case of chapter 6A deduction, long term capital gain and short term capital gain incomes are not eligible as a deduction under chapter 6A. So dear students, in this question the point is given total deduction which is paid by, total amount which is paid by the assessee for getting deduction is 55,000, but deduction is allowable only rupees 31,000. How? Yeah, why? Because income from salary rupees 10,000 and income from house property 21,000. So 10,000 and 21,000 is equal to 31,000. 31,000 are only eligible and capital gain is a long term capital gain, a short term capital gain is not eligible to take the deduction. So dear students, with the help of these types of question regarding to the total income of an assessee, regarding to the gross total income of the assessee, regarding to the deductions under section 80C to 80U are help to all of us to find out the total income, gross total income and taxable liability. Again, we are discussing about the case 4. In the case of 4, pension received from state government. Pension is a part of the retirement benefit. Under the retirement benefit, pension may be two types. First, monthly pension and second, commuted pension. First, monthly pension. In the case of pension, first monthly pension and second commuted pension. Monthly pension will be taxable in all types of cases. Monthly pension will be taxable in all types of cases. Monthly pension will be taxable in all types of cases, whether the employees are government or non-government. Whether the employees are government or non-government. In the case of commuted pension are two types. First, commuted pension received by the government employee and commuted pension received by the other than government employee. If the commuted pension is received by a government employee, it will be fully free from tax. Sir, please section 10, subsection 10, capital A. Section 10, subsection 10, capital A. Monthly pension is taxable, but commuted pension will be not taxable in the case of government employee. So, non-government employee, in the case of non-government employee, monthly pension also taxable as well as commuted pension on the basis of subject to satisfactions of the condition. What are the conditions? If the employee get the amount of gratuity, then 1/3 of total pension. So please again tell, yes, 1/3 of total pension will be exempt under section 10 subsection 10A. If the employee does not get the amount of gratuity, then 1/2 यानी 1/2 1/2 of total pension will be exempt under section 10 subsection 10A. So dear friends, this is the rule of the pension. At the time of computing the pension will be started when employee got retired. When the employee retired, so then commuted pension is not necessary. Commuted pension depends on the employee's wishes. Whether employee want, so he can get the amount of commuted pension, lump sum pension, selling of the pension को बेच देना. Yes, employees having the various types of social obligations after the retirement, like as a marriage of the children, settlement of the children, construction of the house, construction of the residential house, and many other things. On the basis of the fulfillment of these types of social obligation, if the employee get the amount of pension on the basis of lump sum, this will be treated as a commuted value of pension. Okay, students? So this is the rule of the pension. We should aware about this. Dear students, now again in this question, pension received pension received from Canadian government. Pension received from Canadian government is not taxable in case of non-resident. Non-resident. Dear student, non-resident, because this pension received outside India, and outside India it will be taxable in the case of ordinary resident. But this question is related to the non-resident. The show pension will be taxable when assessee is ordinary resident. Second, income from house of property. In the case of income from house property, in this question, municipal value, fair rent, standard rent is not given. To show in the case of when these components are not given, so then actual rent will be treated as a gross annual value. Actual rent means on the basis of receiving the rent, how much months are related to receiving the month will be the important fact. So in this question, 5,000 per month, we can see in the question, to rent received in respect of house property, point number 3rd. In point number 9, we can get the information rent received. We can get the information point number 9. 60,000, we can say 60,000, 30,000 amount of rent. This rent will be taxable under the second head. Second head means income from house property. In the case of income from house property, the amount of rent will be taxable under the head of house property. So in this case, gross annual value and annual value both are the same. So why same? Because municipal tax and unrealized rents are not given. When municipal tax and unrealized rents are not given in any question, so then actual rent will be treated as a gross annual value as well as annual value. So we are justifying in this question 60,000, 30,000 will be annual value. In the case of, and after computing the annual value, there are two types of items which are deducted to find out the income from house property. First, deduction under section 24A, deduction under section 24B. Under section 24A is related to 30% of annual value, and 24B is related to the interest on loan for house building. HBL, interest, house building loan, interest on HBL. So in this question, HBL, interest on HBL is not given. So rupees 30% of annual value, 30% of rupees 60,000, 30% of rupees 30,000 will be 18,000 and 9,000 respectively. So then resulting figure will be treated 42,000 and 21,000 income from house property. After the computing the income from house property, capital gain will be taken as a consideration. Long-term capital gain on sale of land at Varanasi. Long-term capital gain in both assessee case, under the cases of both assessee M and R, the long-term capital gain is given. Short-term capital gain on sale of the listed company in respect of which security transaction tax was paid, rupee 20,000 and rupee 2,50,000. Then total value of capital gain rupees 1,20,000 and 3,50,000. So then we are saying total amount of gross total income 1,62,000 and 3,81,000. After it, deduction will be minus. Deduction will be minus. In the case of deduction, a very important point is taken as a consideration of 31,000. But total amount of deduction is total amount in investment 55,000. Total amount invest 55,000. We can say 55,000. 55,000. But amount is allowed only 31,000. Why? 21,000 income from house property and 10,000 income from salary. 10,000 and 21,000 is equal to 31,000. Total amount 31,000 and but spent amount 55,000. Rest of the amount will not be able as a deduction because in the case of capital gain is not having the eligibility of the deduction under chapter 6A. So dear students, we are able to say these types of question helps all of us regarding to the computation of the total income including gross total income. So in the case of first assessee, the total income 1,22,000 and in the case of second assessee, total income rupees 3,50,000. This types of income is also called the taxable income. So dear students, so again I have repeat the solution of the case number 4 so that you have the actual and accurate awareness about the deductions and exemptions while we computing the income while we computing the total income or gross total income to find out the tax liability. So again, I am giving thanks to all of you for your nice listening and support and cooperation. If any query, any confusion regarding to the solution of the question or any types of amendments, so without any hesitations you can contact to me, you can call me. So once again, thanks to all of you.